So the next two indicators we're going to take a look at are different from the previous RSIs, which only focused on price action and rate of change. We're going to talk about indicators that start to look towards volume and incorporate volume in their calculations. First one we'll talk about is the Money Flow Index, or the MFI. So the MFI is an indicator that utilizes price and volume metrics to identify market conditions. It's different from the RSI, which only incorporates price data and rate of change. MFIs are based on an oscillator that indicates overbought or oversold conditions between 0 and 100. And MFIs are considered leading indicators, meaning that they provide indications of trends and reversals sooner than lagging indicators such as RSIs and the MACD. And the main reasoning behind that, or the theory behind that, is the fact that it incorporates volume and overall buying and selling volume in its indications, where using this we can see if there's an increase in buying pressure, that's a suggestion that prices could go up in the future. If there's a decrease in buying pressure and an increase in selling pressure, that could be a suggestion or a reading that prices could fall soon. Here's an example of the MFI. This is on Bitcoin to the US dollar on the daily chart. And as we see, as the MFI comes down, it gives a indication that overall volume is decreasing, and particularly selling volume is decreasing. Whereas if the MFI is increasing, we see a potential area that volume is increasing and that money is flowing into the market at some point. Here's an example of the formula of how the MFI is created. So it would be money flow is equal to 100 minus 100 divided by 1 plus money flow ratio. And here we see the various ratios of the money flow and calculations of raw money flow, a typical price. These are things that you don't necessarily need to know. You don't need to be able to calculate the money flow index. It's just useful sometimes to know how these indicators are formulated. The next one we'll talk about is the Chaikin money flow indicator. So similar to the MFI, the Chaikin money flow, or the CMF, displays the flow of money and momentum by calculating the change in price and the volume of a traded asset. CMFs are similar to the MACD in that they use exponentially weighted moving averages, EMAs, to display data. Now, when the CMF is below the center line, it indicates a downtrend. And when it's above the center line, it indicates an uptrend. This is a reoccurring theme with oscillators, particularly what we saw with the RSI, the stochastic RSI, the money flow, where these different indicators will give are based on a set range, 0 to 100, and anytime it really crosses over or holds above that center area, that indicates a strong uptrend or a continuation of an uptrend. Whereas if the indicator falls below that center line or it comes up to it and is rejected, that's either a continuation of a downtrend or a reversal into that downtrend. So here's an example of the Chaikin money flow. This is on Ethereum on the 12-hour chart. And as we can see here, that's not always set between 100 and 0. Actually, here we see the 0 line functioning as our middle point, right? So we could say maybe it's a range between 1 and -1. This is something that could happen, right? And it really depends on how this is preset. As prices come down, we actually saw here, which is interesting here, prices came down to this particular point, And we could arguably say, well, we formed a divergence, right? The indicator stayed at the same level, formed two bottoms. Arguably, you can maybe even make the argument that this is a slightly higher bottom compared to the bottom before it, and prices continue to fall. So this is an indication that, well, selling pressure, prices came down, selling pressure seems to have exhausted, because if selling pressure was strong, it would have formed yet another low. It did not do that. This is a chance for the bulls to come in and for the market to reverse, which it did in this particular situation. Here we see another divergence with volume with the particular Chaikin money flow. Price made a high here, continued and made an even higher high here. Overall, not making higher highs, right? So this is an indication, well, something's going on here, right? Price came down, continued to make yet another high, and yet overall we see these consecutive high, a lower high, and another lower high, consecutive lower highs in the Chaikin money flow, while the actual price of Ethereum continued to climb. So this is another indication of what was to come, particularly in September, of this resulting downtrend. We'll talk a little bit about the differences between these two volume-centric indicators. So the CMF uses the difference between a 3-day EMA and a 10-day EMA, exponential moving averages of the amount of money flowing into an asset and how its prices are affected, while the money flow indicator factors volume along with price movement to indicate upward or downward momentum. Now, although these indicators both attempt to predict price market trends and prices, they may display different signals because they're calculated using different values. And this is really where we start to see the differences between them. With the CMF really focusing on these EMAs, the 3 and the 10-day EMA of the amount of money flowing into the asset and how its prices are affected, whereas the MFI focuses primarily on volume with price movement and to indicate upward or downward momentum. Here are some side-by-side comparisons with the money flow indicator and the CMF. And as you can see, they're both useful in different situations. It really depends on how you wish to look at them and utilize them in conjunction with your own analysis. This is Matic on the 4-hour, by the way. So let's say, all right, so here we are. We formed this extreme high. This is the thing that really sticks out to me. We formed this extreme high in late December on Matic of about 290, right? It's a really extreme high. So we formed this $2.90 high. So what happened at this particular level? What in the indicators could have suggested that this was a market top? Well, looking at the MFI, we formed a high, and even before that, we formed a higher high. So here we see a bearish divergence, right? Price is going up while the MFI is coming down. It's forming lower highs compared to the price, which is forming higher highs. So that was a sign. Let's take a look at the CMF. So at the same time, price is here. We ultimately see price formed a high here, right? And then instead of actually going up, right, with price, the CMF actually went down. So that was an indication right there. And even falling below this zero line, so that before the midpoint, below the midpoint. So that's an indication that that the overall trend, and then money was the flow of money into the asset was reducing or lessening, while the actual price of the asset was increasing. That's a suggestion that, well, if the flow of money is decreasing but the price of the asset is increasing, that could be a suggestion or an indication that, well, these extreme prices are unfounded and they're not necessarily supported, right? And this is also supported by the MFI, right? We see this in the MFI. We see this bearish divergence. Overall volume buying volume does not make that extreme high that it needed to, compared to the previous high observed here. So they're both useful in identifying market reversals, as we saw here, but one may appeal to you in a different way, and they're both viable. They're both used by many traders, so it really comes down to personal preference at that point. Here's another example. This is Bitcoin on the daily chart. We have our MFI here and our Chaikin. Let's say, all right, so we could say here, let's take a look. Well, we already looked at a reversal to the downside, but even just to be quick, prices are making these highs, MFI making lower highs, so that was another indication. Same thing with the Chaikin. We even see lower highs being formed, and even here, as prices at this extreme high, prices falling below the 0 point, below the midpoint, so that was not a good sign for Bitcoin at this particular moment. Let's take a look for a reversal to the upside. So here's our example. This was in late July. Bitcoin falls to this extreme low of about 28K. At the same time, we actually see prices falling. The MFI is coming up. So that's an indication of a disagreement or a divergence, and in terms of just overall market trend, right? Prices are coming down, especially at this point, and they're starting to increase. And we can even arguably say, well, here we see multiple times where the MFI was trying to breach past this 60 level, right? 1, 2, 3, and failed to do so. What's to say that it, on this particular increase and on this price pump, it's not going to stop out again, right? Right? What's to say, like, oh, this is just a false breakout, right? Especially at this particular level. The MFI actually breaks past this level of resistance and breaches into an overbought condition, right? It breaches past this 70 or 80 level. That could have been used as a potential entry, right? Or let's say right here. Even if you didn't catch the exact bottom, if you were to have entered here, you would have continued to be profitable, right? You don't always need to catch the exact bottoms and the exact tops in trading. Sometimes, if you just catch 60% of a move, or the meat of the move, right? You don't catch the bottom, you don't catch the top, but you catch the middle of it, you'll be very profitable. You see the same thing with the CMF here, particularly forming an extreme low observed here. And even if we wanted to go low to low from May, this was in sometime in mid-May, around here, prices, I mean, if we were on TradingView, I'd be able to see exactly how this lines up, but it does look like some sort of divergence where prices are coming down, the Chaikin, the CMF, forming a higher low, right? This is much more of an extreme fall in the indicator compared to here. We see this higher low. The lowers are starting to increase, suggesting that there could be a potential reversal. Here's another example. This is Algorand on the daily chart. And let's say here, this was a particularly explosive breakout in September by Algorand, reaching new all-time high. So let's say what's interesting here, we'll start off with the Chaikin this time with our bottom indicator. What's interesting here, the indicator several times, it's already above the zero line, above the midpoint. Several times it's attempting to break past it. We see a significant fall below. It's notable, I should say, not necessarily significant. This lines up with this particular dip. While it was quickly reversed back to the upside, so that could have been a potential entry. That alone, the fact that it actually swung back up and breached above this midpoint, buying above that, could arguably be said, oh, that's a continuation of the uptrend. Following that, we do see the Chaikin attempting to fall back below this midpoint, and it acts as significant support once and then twice. So that's a double bottom, if you will. Twice selling volume, I should say, failed to fall below this level, and at the same time we were around here. That's an indication that buying pressure was increasing and taking over. If selling pressure was increasing, we would have fallen below here. So this was a sign that selling pressure was attempting to fall below, didn't, it failed, and now we could have entered here at some point and then rode this up. As we saw, it climbed quite a bit.